Fun Fact Friday. So I always, there's so much to cover. I have a website, a screen I'm going to show y'all here in just a second. But I always get the question, you know, our infinite banking policies, are they FDIC insured? And the short answer is no, they're not. And I don't want them to be. I'm going to get into that in just a minute. But the companies that I use, all of them, I only use A-rated, mutually owned insurance companies that have been around for 100 years or more, okay? And in order to get this A rating, they are required to have a minimum of 100% reserves on hand for any dollar they guarantee. So if you have a guaranteed cash value in your IBC policy and you use an A-rated company, that means by the way, if you don't know me, my name is Erica Neal. I'm an authorized infinite banking practitioner. I work with real estate investors and business owners on helping them manage their cash flow and liquidity as efficiently as possible. Anyway, when I talk about these policies being A-rated, there is such a discrepancy between the requirements that are imposed on these companies compared to what they impose on the banks. So when you talk about FDIC insurance, let's talk about this real quick. FDIC, they insure up to $250,000 per person on the bank account. So $500,000 if you're married. And a lot of people they're have multiple bank accounts. That's cool, whatever. But the FDIC has what's called the DIF. That is the Depository Insurance Fund. This is their reserve account that holds the cash that they have ready to go to pay out their liabilities. If you had to guess, what do you think their reserve ratio is? I told you A-rated insurance companies are required to have 100. Go ahead and think about it. I'll wait. As of December 31st, 2024, the DIF has a 1.28% reserve ratio. And that is an increase of 6 basis points from where they were in June of 2024. Okay, this is the FDIC website, so fdic.gov. So we have May 20th, 2025. So they released today that they want to get to the statutory minimum of 1.35. That is their goal, is to get to 1.35 ahead of September of 2028. As of December 2024, it was 1.28%. Again, that was increased by 6 basis points from the 1.22% they had before. Imagine buying a $500,000 home and then insuring it for $5,000. The bank would never allow you to do that, but that's exactly what they're doing with your money in the bank. So do I give that the infinite banking policies do not have FDIC insurance? Absolutely not, because FDIC insurance is not at all what we think it is. Now, let's be real. Are they going to let banks fail or do anything like that? No. If they needed to pay these liabilities, what are they going to do? They're just going to go reprint all the money. Long story short, if you don't want to keep money with the banks because you're tired of their nonsense and know that they're lending out more than what they actually have, then give me a call and we'll actually protect your cash the right way.